Between Plays. It's the journey and what you do between where you are and where you want to be. Research, prepare, plan, and execute your strategy. Do your DD and stay strong in visualizing and achieving your goals. Our strategy is unique since 2020. An original concept imitated, never duplicated. Real conversations with media influencers, educational and expert speakers, analysts and consultants. Between Plays, bridging the gap between companies and investors.
Hello, everybody, and welcome to Between Plays Stock Market Strategies. And today we have the Analyzing the Venture Markets with Alain the Bid Bellin, Bid Capital and Fine Wines. How are you doing today, sir?
I'm doing fine. I think we have a good show coming on, so I'm very happy.
Oh, I'm totally excited. And here we go with CEO Chase Edgelow of EverGen Infrastructure. How are you doing, man?
I'm great. Thanks for having me back on. We've got it's been an exciting couple months for us.
Well,
you know, I've been paying attention to that. It has been quite exciting. I mean, I was looking at your stock. Your stock price is just, it's just going up, but nice and steadily. I like the fact how it's doing it. It shows what you're putting out in the market, that people are standing behind the company 100%. This is when I look at this kind of share growth, that the people are there for the long run, right? There's a lot of trust in the company, and that's just amazing. I got to put on my glasses to go into a little bit more detail. So let's just do that.
Just to put a little flavor over here. First time we had you on the show was January 18th. Stock was at 260. Since then, today sitting at 350. You had some nice news that we could go into, but we have so much questions to ask you because we did our research, we prepared, plan, and we'll execute, and hopefully you could answer and get everybody on this page of EverGen, EVGN on the venture.
Well, definitely. I mean, we see here that the last month alone, you have over 50% gain. So this is quite remarkable. Chase, I've noticed that you have, news that's come out like pretty much steadily over the last month and a half. It's been pretty interesting, this ride. And I've been looking at the share structure as well. And it's very, very interesting. I mean, you got like some shares outstanding of 13.86 million. Your float is 11.13 million. We got insiders of 20.59%. It's very rare to see that much insiders in the company. All right. And institutions of 12.87. That's excellent. Your market cap is 39.12 million. I mean, a little bit more news that comes out. I mean, this is gonna fly.
I think the thing that a lot of people don't realize, and what we've been beating the drum, hard about, probably going back to the summer when we instituted our normal course issuer bid. We saw an opportunity to buy back a small amount of shares because the valuation was so cheap relative to what we've invested in, what our assets are worth, where we're going. But fundamentally, we've raised the bulk of our capital between $5 and $8 a share. So anybody coming in today is getting a heck of a deal from our perspective. And just to speak to the ownership, management and board is about 16%. One of our largest shareholders sits on our board and takes that up, I think, closer to that 20% number. And then institutionally, most of our capital was raised from institutions. So I think from our perspective, we would say we're closer to 80% when you add institutions and insiders. So it's not your traditional small cap stock. What we've built is a platform that we think is comparable to other infrastructure platforms in the space, and we pay attention to what's happening south of the border, and we're seeing renewable natural gas infrastructure platforms like ours, get increasingly sought after. We're seeing, billion-dollar acquisitions by the likes of BP in the space, Chevron having a hand in the space. So the big strategics, but also the large infrastructure funds that are chasing high returning projects, given where interest rates are currently, looking for things like we have in terms of the projects that we invest in and the returns that we get out of them being long-term contracted, stable cash flows.
Yeah, that's a very, very good. I had a
for it.
question
Go
on
for it.
that because of the interest rates. You touched on the interest rates, and since now that the governments are saying that probably interest rates were at their peak, and now maybe next year or by the end of the year we're gonna start seeing decline. How does that affect your sector or the company? That could be very important and influential on the price of the company or the profits you're going to make or the EBITDAs you're going to make. Can you clarify that?
Yeah, I think what attracted us to the renewable energy space was the fact that you could get all of the same attributes as you see in large infrastructure investments that you see pension funds increasingly chase. The growth of private capital chasing infrastructure, so investing in long-term, stable, contracted, cash-flowing assets has grown astronomically over the last couple of years. The Brookfields of the world, the Macquaries of the world, the Carlyles of the world, all have 300 billion plus funds allocated to this strategy, and I think the reason for it was interest rates were at 0 to 2%, and they were investing in what were low risk asset classes that would provide a 10% return on capital. So that's things like wind and solar projects. That's things like toll roads. That's other government infrastructure. And with interest rates very low, you could invest in a project that had a 10% rate of return and lever that return up by adding leverage, adding debt, and get a higher equity return. And that was the model. I think as interest rates moved up, up towards 5, 6, 7, 8%, a 10% returning project is very hard to lever up. So what we've seen happen is those traditional infrastructure asset classes, the toll roads, the wind and solar projects that have low relative returns, are less compelling than they used to be. It's harder for those big funds to make money off of them and show their investors, if they're promising investors 10% rate of return and they can get 8% in the bond market, that's a lot different than it was 2 years ago where they were 5 or 6% better. So that means they've been chasing projects that have higher returns, and that's exactly what we set up EverGen to do, was to be outside of those low returning infrastructure assets and chase higher returning assets in the renewable natural gas space. So our projects, we look for 15% to 20% project return. So it's markedly higher. So interest rates have less of an impact on us. We don't use as much leverage. We don't need as much leverage to get good equity returns. And so as interest rates come down, I think it's positive. But I think in this period of uncertainty, it means that the assets that we have in our platform are increasingly sought after.
Yeah, you're right, because a lot of people don't want stability, and that's most important, especially with the volatility in the markets. I totally agree with you, Chase. Thanks for that.
Yeah, no, great question,
Chase. I gotta, because we have a lot of people that are out there. Like our viewership is it's worldwide, and I don't say that in a very light sense, actually. And the thing is that when this goes out around the world, you're in the renewable energy space, and the thing is that we're gonna have a lot of new people out there that are be going, wow, I really like this company, but can you just explain very shortly about what your company does and why you pursued going into the renewable energy space?
Yeah, so simply we invest in projects that are renewable energy projects. In particular, we take organic waste and we capture the methane that gets released as it decomposes. And we take that methane and we turn it into pipeline spec natural gas. So we remove contaminants. And with that, we're getting paid to sell green energy into the gas grid. So simply, we're a waste to energy business today. I think any kind of renewable energy infrastructure that is not in the core bucket that we talked about earlier is fair game for us. But we've really honed in on these waste energy projects where we take 3 types of waste in. We take green bin waste from residential household pickup. We take commercial food waste, and we take agricultural waste and manure into our facilities. We construct them using proven technology. We're not a technology company. We're technology agnostic, and there's lots of different types of vendors out there that sell this equipment. Essentially, we're putting all of that waste into a large tank. We're accelerating the decomposition process with heat and agitation and mixing. And off the top of our digesters, we're getting the gas, and we're cleaning it up and putting it into the pipeline. So it's really simple in terms of the infrastructure that we install. And we've got 4 operating facilities across Canada today, and ownership in a large project in Ontario. So we're growing our platform in Canada first, but these opportunities are global and worldwide, and really implementing a process that's been followed and is very prevalent in Europe in terms of how they deal with their organic waste. What we don't have in North America is the infrastructure to deal with it. We've traditionally sent it all to landfill. So what you'll see over the next 10 years is a real transition as we see the value in our organic waste and the value in capturing that methane, which is a greenhouse gas, which is 30 times more harmful than CO2. So by doing these projects, we're really saving the municipalities and the businesses that would have sent that waste to landfill a ton of greenhouse gas emissions. For a lot of them, it's 30% plus of their overall emissions mix.
Very nice. Very nice. Last time when we had a discussion, you were talking about in the next 2 years having about 15 to 20 million EBITDA positive. Is that with your current assets that you control or with new assets? And following that, just wondering, how are you going to grow that? Are you going to issue more shares, or how are you going to grow that?
Yeah, so I think there's 3 steps to that, Alain. It's really our first milestone or threshold is we've got 2 projects that we're expanding of the 5 operated controlled assets that I spoke of earlier. 2 of those projects are actually going through an expansion right now. So we've got construction underway, and one of those will be tied into the gas grid. It's our project in Alberta, GrowTEC. That facility will be tied in the coming weeks. So we're 90% of the way through construction on that project. And then Fraser Valley Biogas, which is our flagship facility in the Vancouver area, has been producing renewable natural gas into the gas grid for about a decade. And that was the original renewable natural gas project in North America to basically prove the concept. We're giving it an upgrade, a facelift, if you will. We're doubling the capacity of that facility from how it was built 10 years ago. And we're under construction on that project and expect to be complete in Q2. So with just those two projects that are underway and near term for those that don't look too far ahead, once those are built out, we've got built out capacity to produce approximately 240,000 gigajoules. And a gigajoule in this current market is worth anywhere from $25 to $60 a gigajoule, depending on how you contract it. So that'll be, we'll talk about how we contract our volumes to utilities and how we get 20-year contracts. But I think that's milestone number 1. And what that translates into in terms of EBITDA is a built out EBITDA capacity through our existing facilities of $8 to $10 million. And then we control, so within our portfolio today, we've got 2 other projects that will step us further up the curve. So we say $13 to $20 million of EBITDA once we add our 3rd project, and then we've got a large joint venture in Ontario, which continues to build on top of that. So that's all within our control, and that's all fully funded. We've got cash on the balance sheet as of the end of Q3 was $12 million. We've got $6 million drawn on a $31 million debt facility. So additional liquidity of $25 million on top of the 12 in cash that we have. So call it $37 million of liquidity, and we're spending about $12 million on the Fraser Valley Biogas expansion. And then our other projects, we've got a mix of the debt facility to draw upon. We've applied for $20 million of government grants. We expect to be successful with some of those. I would say somewhere between 50 and 100% of those we expect to be successful with. And then we'll continue to have free cash flow that we'll reinvest in our assets. So that runway is really, without having to go beyond our existing means, and that's level 2. Level 3 is, the value in this space is platforms are given value for the projects that they have in their hopper. So we continue to add more projects behind those that I've just talked about, taking them from concept to shovel ready, and they become valuable increasingly. But as you get closer to a project that is ready for construction, that's when you're able to finance it in a number of different ways. So whether it's grant funding, whether it's project level debt, bringing in a partner, we can do another $200 or $300 million of construction capex without ever having to raise equity if we wanted to.
Wow.
Yeah, that's incredible.
Very, very.
That's incredible.
Very,
Honestly,
very interesting.
Chase, you know what? I understand exactly what you guys are doing. I see it. I get it. It's this is something that's very interesting for the generational, the young people. Like this here is going to help. So we got a whole EV transition going on. We have the renewable sector, and then this is a sector that's very much needed as well. And I understand the concept, the whole taking these wastes and stuff like that and putting it inside. Actually, I've seen this type of technology, and it's very, very interesting. The thing is that you've piqued I think the viewers' attention to finding out something. So these equipment, machines, whatever you want to call it, that's bringing on the to decompose what you have in order to be able to get the methane released. So we're doing, instead of a big timeline, we're reducing the timeline by, it's almost like a zip file, right? Something's big, really small, and then the methane comes out. You got it. You could track, and you could just keep this going and going and going and going. Now, is a strategic thing here is to try to get them closer to landfills. I mean, sign with governments and stuff like that.
Yeah, I think when we talk about adding projects to our hopper and bringing them to a shovel ready or final investment decision, so that we can then then they're 12 months away from being cash flowing for us. I think we look at 3 types of projects broadly. One being close to agriculture. So one of the largest sources of emissions for farms is manure. So as manure decomposes, the methane that's released there, I think if anyone's driven past anywhere where they spread manure, you know the mechanism that's happening there.
Yeah.
Food waste. So certainly being close to transfer stations and where that food waste is collected makes a lot of sense. And then finally, commercial facilities. So I think in the coming months, you'll see us. We're working on projects that touch all of those 3 spectrums. and expect to continue to add those to our portfolio.
Wow, that's really good. Okay, yeah, I totally get it. What you said it like 10 years. Like what brought you into the sector? I mean, of the renewable energy space, is it something close to your heart? I mean,
Yeah, you know what, I'll
what's
go
going
back
on?
to university. I actually did my thesis on a tidal power project. I'd forgotten that until somebody, we were talking about it. We were doing some design work on our project, and he started talking about his thesis, and I was thinking, it had been a while since I had thought that far back, but certainly the energy space, the energy business broadly has always been appealing to me. I would say it hasn't always been renewable. So I started my career in the traditional energy business, working for Petro-Canada and installing natural gas, upgrading equipment in Northeast BC. So it's nice to come full circle and be installing similar equipment, but being able to use waste as our source of that methane. I think the thing that it makes it all work for me is it doesn't rely on technology breakthroughs to work. It doesn't rely on government incentives to work. There is a real market across North America for green gas. You have private businesses that have made commitments to net zero. So if they can get their hands on this drop-in fuel that we produce, they can meet their targets, and that's really set the price. It's not just one single government or one single carbon credit scheme. No. It's all of them across North America working together that have driven the price of RNG up. And part of the reason that it's driven up is it's solving a problem. It's solving a problem that people have with the emissions from waste, and a problem that people have with how do we transition the entire grid as quickly as possible to lower carbon fuels. And I think the easiest way to do that is to use existing infrastructure. It's not to build a new dam or an entire new electrical grid to run everything electric. We have one of the most impressive assets, I think, that humans can take credit for in North America is this gas grid that connects the far northwest of BC with the east coast of Canada.
Oh yeah,
all the way down to Florida and California and into Mexico. So that gas grid not only transports the fuel. So I mean, I think we have to think of a way to use it. You'll never be able to reinvest with an appropriate return to create an infrastructure asset like that gas grid. But it also is a storage asset. So when we have a cold snap, in BC 2 years ago, we had a cold snap over Christmas, and it was the draw on the gas grid was about 3 times in that one day, 3 times what the electrical grid could deliver.
Wow.
So you'd have to build 3 electrical grids to deliver what the gas grid was able to pitch in as people pull on their heating systems. So I just don't think people recognize that when they think about the transition to EV vehicles or all of these other renewables that have gone on tears. You can't get there without being able to use existing infrastructure and finding solutions that don't entirely turn our existing systems on their heads. You got to work within boundaries.
Absolutely.
What are the near-term catalysts right now on EverGen?
Yeah, so it's an exciting time, in the sense that we've been preparing our projects for construction over the past year. We've now moved to the point in time that we're under construction, and we'll be stepping through those completion milestones. So bringing our first gas on at our GrowTEC facility, moving through construction timelines on our Fraser Valley Biogas expansion, and then flowing gas through our newly minted equipment there. First gas through that as well will be a milestone. We have 3 existing contracts with a large Canadian utility. So we sell our gas typically on 20-year fixed price take or pay style agreements. So we know day one what our cash flow is going to look like for the next 20 years out of these projects. It doesn't fluctuate with commodity prices, and the price that we're getting is, you know, is, as I mentioned, close to that $30 a gigajoule level. That, you know, that is, if you look at AECO spot pricing or traditional natural gas pricing, you know, that would be around $3, $3 to $4. So it's close to 10 times the spot gas price. And the reason we're able to get that and get it on a long-term contract is the fact that it's green gas and it's highly sought after by multiple organizations that are looking to reach their net zero targets.
Wow.
So that's one. So a new contract at Fraser Valley Biogas is something we're working on as well. To give some context there, a 20-year agreement times even, you know, 150,000 gigajoules per year, times a, you know, price that can be anywhere from 25 to 30, or if we go with a more merchant style sales into, you know, into the current spot market, gas is worth $60. So that's close to $100 million revenue contract that we're chasing there, and we've got a number of appealing options. So we'll announce something around that as well. And then adding projects to our pipeline. I think what we've seen, the value that's been attributed to platforms like ours has been, we've seen really high valuations for future projects, despite those projects not being cash flow positive today or not even online, just concepts. There was a transaction in the US, Vanguard Renewables was bought by BlackRock for $700 million. That, you know, that was a company that was just starting to move into positive EBITDA. So we're positioned very well to continue to add these projects. So we're looking to do that as fast as possible. So I think you'll see us active in terms of adding new projects to our pipeline as well.
Last question I would have is, last time you alluded to government grants. Where are you on that, and the size that could be taken by the government or granted by the government?
Yeah, so there, it's never something that we look at as a given. It's always, you know, we always consider it upside. But we've applied for $20 million. We continue to apply for more. So I think as we spend additional capital on projects, we become eligible for grant funding. That could be anywhere from, you know, 15 to 20 to, a lot of the grants are 30% of project costs up to certain levels. So, you know, I would expect that for most of the projects we end up applying for 30% grant funding, and then we're able to recycle any of that grant funding that we get into building new projects. So that's huge. That's huge. That's the level that, yeah, exactly. It's huge from our perspective.
Yeah, because it's leveraging on the grants. Very good.
Basically, I don't have really a question. It's more a statement. It's some of the things that we look at over here is we look for, you know, we talk about the macroeconomics because we deal with like all different types of companies and all different type of industries. And one of the things that's very important that all the viewers out there always have to understand is, you know, there's the macroeconomic factor too of looking at a dying industry and an industry that's at its infancy and growing and has massive growth potential. What I see over here is that you've positioned yourself into the renewable energy sector that is much needed. This is, I find, something that is very interesting and people need to pay attention to, because the amount of growth that you guys can have over the future is tremendous, because you've positioned yourselves into an industry of renewable energy that is just taking off. And when you look at the macroeconomics of that, you don't want to put yourself into an industry that's dying in the next 20, 30 years or diminishing because of the fact that we're going to use less of something. No, we need to use something more. So you got to position yourself properly. And your company is exactly that. That is what I see with your company. And I really appreciate that, Chase. I really appreciate you getting to the renewable energy sector and helping out humanity, honestly, because you're playing a massive role in turning, you know, the world around from how we used to do things into the new way of doing things, which is saving the planet and basically our children. And just like to thank you for that. That's for sure. And I don't know
I
if you
have
want to
one
end off.
last remark. I have one last remark, I would say. And it comes from Kaiser when he says, buy and don't look back for the next 3 years. I think this is a story that you got to buy, put in your portfolio. Don't look at it, the fluctuation, put it in portfolio, look at it in 2-3 years and see what happens.
Chase, listen, I want to give you the last word, and that's true, Alain. I agree with you. So, Chase, for the last word, do you have anything in the pipeline that you could talk about?
Well, I think we've covered some of the upcoming milestones that we have. I think it's an exciting time for our business, and to Alain's point, we are here for the long haul. We've tried to build a platform in a space that we think makes commercial sense, doesn't rely on changing governments, but we happen to be in a time where we've got a lot of support, things like the Inflation Reduction Act in the US, lighting a fire under the sector. And I think 2023 is going to be really bright for the renewable space in general. And even with energy security concerns, it's just about diversifying what we've got available for us in front of us, and doing logical things like taking our organics and putting them in a green bin so that we can use those nutrients as fertilizer, and we can capture the gas and use it as energy. I think that's just simple things that make sense, that will be things that people do versus you'll go way out of their way to change. I think you got to make change little bits at a time. So I appreciate you having me on.
Well, you know what? I'd love to have you on again every time you get some news and some updates.
That's exactly what I was going to say. I hope to see you soon on our show.
Absolutely. Thank you, gentlemen.
No problem. So to everybody out there that's watching, always remember, research, prepare, plan, execute. Thank you so much, Chase. See you, Alain. Stay strong, everybody. And to the next show.
Between Plays, it's the journey and what you do between where you are and where you want to be. Research, prepare, plan, and execute your strategy. Do your DD and stay strong in visualizing and achieving your goals. Our strategy is unique since 2020. An original concept imitated, never duplicated. Real conversations with media influencers, educational and expert speakers, analysts and consultants. Between Plays, bridging the gap between companies and investors.